All right, welcome back to another episode of the Hizzy Hustle, everyone. My name is Tyler Heisman, licensed realtor here in the Okanagan. We got a major update with some real estate news. Whether you're buying, selling, or investing in 2025, I think it's definitely something you're going to want to hear. New listings have surged by double digits in January, but at the same time, sales have slowed down quite a bit. You know why, obviously. It's economic uncertainty. So today we're going to be breaking down one of the videos done here by CREA and Chief Economist Sean Cathcart, one of their podcast talks, and let's see kind of what these guys are having to say about it. As you can clearly tell, I am in my Mercedes race kit with a red hat for one of two reasons, because I haven't maybe gotten any of my Ferrari merch yet, but we'll see. We'll see. Let's just take a look here at what we're dealing with. So, first things first, we got new listings 58, price decreases 13, solds 21, canceled 15, expired 3. Price increases, can't wrap my head around it, but this is kind of on trend for what we're chatting about today, which is the fact that we have just a massive amount of listings. We got 58 new listings and only 21 have sold, so that's just almost 3 times is coming on what's selling in a 24-hour period, and even just monthly, right? So we have a little bit of a surge there, but what does that put us into? So if we take a look here just at our number of how there's 7,230 listings currently at the moment. So yeah, it's a lot. It's definitely a lot, but as you guys can see, I might be tuned into some preseason testing here in the morning. So I tried to make my my morning revolve around that. So yeah, let's take a look here. So CREA posted a video here. New listings jump to start 2025 as uncertainty weighs on sales. Yeah, I agree. I think BC and Ontario have definitely lagged behind the rest of the country when it comes to these price increases, but I think it's not necessarily a bad thing, because we had such a crazy affected market from COVID that it got so ahead of where people were able to manage. So now that things have slowed down quite a bit and things look like they could potentially be correcting themselves, or at least just staying stagnant with these tariff threats and everything like that, God, to be honest, at this point, I wouldn't be surprised if we just rode this wave for the entire 4-year administration. So I don't think people should get too worried about it. Once again, I would just like to kind of bring attention to 2017 or 2018, I believe, when the first round of tariffs got implemented by the Trump administration. The pain was felt, but I don't know how badly it was felt. I was in a different point in my life. I was in my early 20s. It was almost 7 years ago. So I maybe just didn't care as much, but I think a lot of people, especially the millennial generation and my generation, are getting a little bit more cognizant about the external forces that dictate where their spending can go, how their budgeting needs to be, and essentially how much disposable income they have. Yeah, so that's kind of my biggest take from it, because I myself, obviously, with related to being a realtor, I try to keep myself relatively up to date on what's going on economically in the country, because it can give you a pretty good idea of what's going on or what could potentially happen in the real estate market, right? But it's like trying to predict the future. I wish I had a crystal ball. I wish I was great at gambling. This is also the reason why I just don't gamble, because it's tough when you don't get it right. So, but it's hard, right? It's hard to predict. So keep on top of it and keep proactive. So let's take a quick look here and see what these guys have to say.
The number of new listings in January was not normal. Let's see if Canadian home sales kept up. Welcome back to the show. I'm your host, Matt Day, and joining me again is CREA Senior Economist Sean Cathcart. And we're going to take a look at the latest Canadian real estate data. Not much affecting it, eh?
Did you have a loss of Canadian sovereignty on your 2025 bingo card?
Not to start the year. No, definitely not. Okay, let's get into the Canadian real estate data. Let's talk about home sales and new listings. There's a lot of noteworthy things here.
Yeah, for sure. I mean, there's a couple of standout trends in January of 2025. One was a big increase in new listings, at a sort of unusual time of year for that, 11% month over month from December to January. I mean, if you look past the COVID era wild swings, that's like the biggest ever going back to the 1980s. So that was a surprise. We also had another drop in sales activity, 3.3%, not huge. The thing to know about that is it's not the monthly data, but the daily and weekly trends. So if you was looking fairly normal on a weekly basis up until the third week of January, and then you hit the fourth week and it dropped straight off. And so in both cases, it was really more of a BC and Ontario thing. A little bit of Quebec mixed in there too. But no surprise that it's the expensive markets that have been on the cooler side that where that was the trend this month.
Okay,
and this is welcome news for the people in my area, like the Okanagan, that was heavily affected by the COVID inflated market. It's a time of relief, and it's not a time where prices are going to drop, because in my personal opinion, I think the government and the Bank of Canada or whoever is in charge of trying to deal with inflation and keeping our GDP at a certain level and all that type of stuff will do everything in their power to keep housing prices at where they are, because I think housing, if I'm not mistaken, makes up more than 20% of Canada's GDP, national GDP. Gross domestic product. So I think they need prices to stay high, not keep raising, because that's not good for the economy and the market and the ability for people to actually buy and sell these goods. But they need it to stay high, because that number will heavily affect our country's wealth, right? So it's a time of hopefully some recovery for those people who are being proactive and really grinding down and trying to get in front of this big wave that just pushed everything so far forward, right? So if you're worried about affordability in the future, the best thing to possibly do is prepare as best as possible, as if you're going to be planning to buy. So, you need to have enough money for a down payment. You need to know where your budget is, and you need to be aware of what external forces are weighing on your ability to produce income, right? If you're worried about your job, if you're worried about this, if you're worried about that, be proactive in this time before things get really bad, and try, if they even do get bad, just saying, that's the playing devil's advocate here. You just be proactive, right? Try to negate all these potential issues, just like what our country and our government should have been doing in the first place, is to take away these moments of vulnerability and allow yourself to get ahead and to do well, right? Don't be reactive. Always try to be proactive. It's the most important thing.
Okay, so in theory, we have a bunch of new listings and we have less home sales. So that should bring more balance to the market. And is this a trend that we can see happening?
Right. Well, there's a lot of uncertainty out there right now. Certainly, it does suggest a softer pricing environment again compared to the end of last year. And, on that sales piece, I mean, there's no doubt what the cause was of sales falling off in the fourth week of January. It was, the Trump administration came in on day one. They said they were going to impose these huge tariffs on Canada. And so it's no wonder that the, prospective home buyers would pull back, right? And so I'm trying to think of an analogy for that. There's something called a liminal space, which is this, it's like being in a hallway. You're not where you were, but you're not where you're going yet. Everyone wants to ask about, what is the impact of tariff on versus business as usual. We're actually in this in-between phase. And there are some people saying that we might be in that for the next 4 years. So anyway, that obviously with housing, that creates uncertainty about the future, which causes people to pull back. In terms of that big increase in new listings in January, that one was a surprise. Obviously, we do have a lot of those 5-year mortgages that were originated starting at the peak of the COVID market where prices were very high, mortgage rates were at record lows. And so a lot of those are going to be renewing starting this summer and over the next couple of years. I don't know if there's maybe people doing the math about being able to afford those. And there's also
So, and this is another one too, and there's more than one situation that I kind of see in this. We're holding more listings now than I think we ever have in the past as our team, and I don't think that it's because people don't think that they can afford whatever it is. Now, we might be the second part of this because we deal with a lot of people coming in and out of the Okanagan and whatnot. So people selling here, I don't think they're selling here because they can't afford to renew or they don't want these new high prices on their place. I mean, anybody who is advised not haphazardly would be aware of the fact that that 5-year term for their mortgage rates, that was an anomaly. Like, it's mind-blowing to think that interest rates were going to stay at the 1% mark for anything longer than that short period of time, right? Like, that was a crazy situation, and we'll never see that again. To be honest, I hope in my lifetime, because it created so much problems after the fact that it's not worth it to save a few $1,000s over the course of 5 years. Like, yeah, I'm sure it was amazing to pay, $1,000 a month less than the average, but it was only good for those people. It's the easiest way to say it. For everybody else, it just messed up a bunch of stuff, and it made the potential for even being a homeowner impossible for some people. So I think the negative impact greatly outweighs the positive part of that. So, yeah, I think it's definitely something that people could be cognizant about. I think it's a little bit of a different situation based off of, I think it happened last year when the government said that mortgages now, if you renew your mortgage with the same lender, I believe, if you don't go shopping for a new mortgage lender, then they can't they're not allowed to requalify you, right? And based off of the fact that we have a stress test system in BC, which is 2% above your current rate, or the 5% stress test mark, which is whichever is higher is what you test at. Most of these people will be testing at, or would have tested at 5% back in the day, and now the interest rates are about at 5%. So there's no real worry about it. It's just a matter of whether or not you want to take on these new mortgage payments, right? And if we're talking about a mortgage on a $500,000 mortgage, the difference between 1.4% and like 6% is like $1,200 or $1,400 or something like that. I'm just using round numbers because I'm just going based off of what I see on my mortgage. I'm not a mortgage broker. I'm a realtor. I'm here to help you in the sale of housing, not financing. So that's kind of my take. But yeah, I think definitely the government implementing that type of legislation changes it a lot, right? Because people don't have to requalify at 7% now, or 2% above the rate, because we're sitting at 4.5%, the high 4s, low 5s, and then 2% above that, right? So that could potentially rule a lot of people out. But it just, you're now at the mercy of your lender.
Just uncertainty about the future and your job in a situation where we're being threatened with maybe a massive recession. So.
Yeah, for sure. Okay, let's switch gears and talk about pricing. As you know, Korea has a forecast of a 4.7% increase to the national average price. So what's going on around the country now? Is that still on track? Are all these factors having a play at that, or what's going on?
So at the national level, not a lot's going on, and that's been true in BC and Ontario as well, which is sort of holding that national number down and keeping it sort of flat. But everywhere else, prices are up.
Let me go back to that real quick.
Prices are up.
So come on.
Flat.
What are you doing? So yeah, you can see Canada is just above the 1%, BC's below 0, Manitoba below 0, Ontario slightly above, and that essentially counteracts the entire country. Like, that's just wild to me, right? You got Saskatchewan almost up at 12, Quebec's above 10, New Brunswick's over 12, Newfoundland's just over 12%. Like, that's a crazy amount of residential sale or price increases, and yet our Canadian average is super low, because it's pretty much the difference between BC and Ontario. Yeah. Probably propped up by about that much, just based off of the rest of the country.
Been true in BC and Ontario as well. So everywhere else, prices are up. So at the national level, the MLS Home Price Index.
And that's once again another thing that I really, really want to emphasize for those people here in the Okanagan area, is that this is not the best opportunity to present itself. Not like it would have been, post 2008 type of thing, but you have breathing room, and I don't know how much longer this breathing room is going to last for. We really predicted this year to be a price increasing year, and things for things to change, but that just got hindered by the American administration, right? And these are total external forces that we had no control over, but they're not your normal external forces, right? Like, I mean, we saw it coming, but nobody thought it was going to. Nobody thought that the administration south of the border here was going to try to steamroll the entire country, or the entire world at one time. So, you can't always plan around somebody doing something at the drop of a hat, right? So, yeah.
National composite was basically unchanged on a month-over-month basis, as down by less than 0.1%. On a year-over-year basis, it was basically unchanged. It was up by less than 0.1%, although it was the first increase since last March, technically, but not much of one. But you go below the surface and you look at the prairies in Quebec and the East Coast. I mean, prices are up everywhere. I mean, on a year-over-year basis, let's do a rundown here. On the prairies, year-over-year price growth is averaging about 4%, a little bit more in, I think Manitoba, a little bit less in maybe Alberta. In Quebec, it's like 6% year-over-year. In New Brunswick, they're on top of the podium, double digits, almost 11% year-over-year price growth, and that's really St. John and Fredericton that are really taken off since last summer. Nova Scotia is, I think, at about 5%, being held back a little bit by Halifax, expensive market, right? PEI is at 3% year-over-year, and Newfoundland and Labrador, amazingly, after so many years of sort of struggling and population decline, 8% year-over-year price growth rate at the moment. So it really is the Uno reverse card from 10 or 15 years ago, where it was all about Toronto and Vancouver, and now it's sort of everywhere else. And but obviously there's a lot of uncertainty out there right now that could derail everything that's going on right now.
All right, so thanks for explaining everything we do know right now. There is a lot of factors at play externally, but at the end of the show here, let's talk about what you need to know. There was an 11% increase in new listings from December to January, which is pretty uncommon this time of year. Home sales were down 3.3% month over month, and prices continue to climb in places like the Prairies, the East Coast, and Quebec. So, Sean, I think we did a good job of recapping where we currently stand. Again, a lot can change, and that's why we're encouraging you to tune in next month. Thanks for watching, and we'll see you again then.
All right, well, there you go. You saw it, CREA, Canadian Real Estate Association. Great video. You saw the stats.crea.ca. Go and check them out if you ever feel the need to get caught up on the stats, or better yet, stay tuned to this channel, because you'll get them right here. Yeah, so that's pretty much all I wanted to touch on today. Just a little bit more market insight on kind of where things could be going for this year. I'm not leaving the office today. I need to catch up on about 6 hours worth of preseason testing, so I am going to do everything I can to stay right in this chair. But yeah, so if you're interested in coming up with a game plan, give me a shout. I don't care where you are in this country. I am down to help anybody at any point in time. We know some amazing people across this whole country that can help you navigate this crazy market. So please give me a shout. Be proactive. Don't lose hope. Budgeting will be the thing that helps you the most, although I don't personally believe that keeping cash is the most valuable thing. You always need to have some cash on hand, because when the time comes where it's time to pull the trigger, you need to be ready. So be ready, be proactive, like, follow, subscribe, hit that notification bell. Stay tuned to this channel if you want some insight onto really just anything. I mean, obviously we cover mostly real estate stuff here, but I like covering it all, right? Yeah, that's pretty much it. Thanks for tuning in.